Well, thank you everyone for joining us today for another tax talk, and very much appreciate you taking time out of your day. I'm excited about this discussion. Now, I have to caution that because my wife always explains to me that not everybody finds tax issues quite as exciting as I do. And then when we talk about things like tax withholding, I realize that some people's eyes want to roll, but this is pretty important. Probably one of the more important tax policy issues that we're going to have coming up this year. And it's really on this issue of the remote workforce and where things are going. It's a lot of movement right now in terms of where employees work, how employees work, and the potential tax effects of that are important to talk about. I'm fortunate today because I've probably got two of the bigger experts in the state on this call with me, and two of my very favorite tax professionals in the state. First, let me introduce Glen White. Glen's the Deputy Tax Commissioner at the Nebraska Department of Revenue. The way I'll portray Glen is I had the distinct pleasure of serving in the IRS during the Reagan administration, where the commissioner had the view that the taxpayers were customers, which was a novel view and got him on the Tonight Show with that discussion. But we truly did. And every time I've ever had any dealings with Glen, he is the consummate professional, calls balls and strikes, and is just one of those true tax professionals in every sense of the word. And so, Glen, thanks for being with us today.
Yep, thank you for having me.
And Nick Neimann. Nick is with McGrath North, a long time, a well-known tax attorney within the state. Practices in many areas, but has a subspecialty around state tax and incentives that Nick, you're probably the expert when I get into these issues all the time, and it's great having you here, Nick. So thanks for being part of this.
Good, great to be with you, Brian, and with other members of the chamber. Appreciate it.
So let's jump in, and I'm going to start with the withholding side of the issues. And because those are the ones that get the most attention. We'll finish and talk about some other issues, Nick, but on the withholding side of the issue, the question of where do employers and employees withhold income taxes when they're working remotely in another state. And this is not a new issue. Obviously, employees have worked remotely for temporary periods and even for longer periods for some time. It really became an issue, and the three of us had the opportunity to have lots of discussions about this during the pandemic, when suddenly permanent employees who were always office employees for temporary periods, maybe for 10 days of seclusion, or maybe for 2 months of some corporate policy, were no longer in the office at the same times they were, but they lived in other states and were working from home. What does that mean? Let's start there, Glen, and if you could just kind of walk us through the general withholding policy rules under the current Nebraska laws, and kind of those discussions we had during the pandemic, and we were trying to figure out what happens in this temporary period and what the department did there. I think that's a good setup for now. Where do we go now that we know that we have much broader issues over a long period of time now? So Glen, I'm just going to have you level set us with just kind of the history on this issue with withholding on employees and the pandemic.
Yeah, so with prior to the pandemic, I think you both recall, and we'd had some discussions on the phone and stuff on how to deal with that from the withholding perspective, as well as the incentive issues. And so the governor essentially issued an emergency declaration there. I think it was March 13 or 20. And as far as withholding was concerned, what we had said is that maintain the status quo. So if your employee was an office worker, just continue to withhold like they were an office worker, even though now they're remote working. I think a lot of states did the exact same thing. And so that temporary emergency order went through. I think it ended at some time in July of 21. And that was helpful to a lot of employers to deal with this issue, because we at the Department of Revenue, we pushed out 70% of our workforce out to their houses. And so we had people working from not just in Nebraska, we had people working in Kansas and Iowa and a lot of different places. So as far as the basics of the withholding, there's you have your residents and you have your non-residents, and withholding, as far as what is subject to withholding, mirrors in Nebraska the taxability statutes. So if you look at the original statute, it falls back to what is subject to tax, and residents and non-residents are treated a little differently. And so a resident employee, you're going to withhold on all their income, and then you're going to give a credit for if you're in Omaha and you got an employee that's working over in Council Bluffs, you're going to give credit, you're going to take credit for the withholding that happens for Iowa. But you for Nebraska withhold on all the income. For non-residents, however, it's a little different. And so you have to look to see what's taxable for the non-residents. And there's a statute 2733, which goes through the, obviously if you're a non-resident employee just works in Nebraska, you're going to withhold 100% Nebraska. The question is what if that non-resident is working in other states, and you're going to we have a Schedule 9N where the employee can fill out and basically say how much to withhold from the different states. In 1973, the Nebraska legislature passed LB 526, and they brought in 2 new sections into 2733, which basically brought in what I'm going to call the convenience rule. And so the convenience rule is where if you have somebody, let's say they're working from home in Council Bluffs, but the office is in Nebraska, the convenience rule says that if it's for the employee's convenience that they're working in Iowa at their home, then that's all Nebraska income. And so and I think there's maybe 7 or 8 states that have that same convenience rule. And so you would be obligated to withhold. And this is kind of the thing that one of the reasons why we did that temporary order, to tell folks to continue just withholding the way you were before the start of the pandemic, is because of those kinds of issues. And so you have some, obviously, if you're working, if you're a remote worker in Iowa, Iowa might want withholding as well. And so you have that competing issue with withholding for a non-resident. Of course, if they're a resident of Iowa, Iowa's just going to withhold on all their income presumably and take a credit for Nebraska withholding that's required. And so I'll just say that there are 2 regulations that govern this area. One of them, it's Title 316, Chapter 21, which is the withholding regs, and it's actually Reg 5. So that's all your withholding rules. And then Reg 21, Reg 6 is for withholding for non-residents. So Reg 5 is for residents, and Reg 6 is for non-residents. And so we actually have some relief in here with regard to the convenience rule, insofar as there's a regulation in the withholding regs. It's Reg 22003.01C1, which basically says that if they're never in Nebraska, then you don't have to do the withholding. And so that gives a little bit of relief that if they're never in Nebraska, they're always working from home. In other words, they never come into the office or anything, then you don't have to do the withholding. And then, and kind of what I'll also mention the fact that there's an issue about the home office. Is it an employer office? Is it somewhere where you keep inventory, those kinds of things? And if that's the case, then potentially you could say that it's not for the convenience of the employee, it's actually an employer office. So that's the basics of all the teleworker issues that I wanted to kind of throw out there.
Okay, so Glenn, one, thank you for the work during the pandemic, because that was really helpful. People did not want to change payrolls all the time depending on what was going on in the particular week in COVID. And I think the department did a nice job of providing that relief through the end of the pandemic emergency. You know, the convenience rule is helpful, and I've been out on the site, and actually the withholding rules are easily found on the department's website, and that's really helpful. You know, the truth of the matter for me is I've always been an office worker, and when I did have to go home for a while with COVID, we had not built a house with an office for me, and so I ended up like a lot of people I could tell on Zoom. I ended up next to the furnace down in the unfinished part of the basement on an old desk that was sitting down there. That didn't look a lot like an office that was convenient for my employer, because it wasn't even that convenient for me. Trying to do Zoom calls over the sound of the furnace. I assume I would have some sort of issues with that going forward. And I think one thing you see is all the office people work completely differently at this point. And young people work differently than my generation. Nick, let me turn it over to you just for a second. And you know what? There's a lot of practical issues with this. I mean, we want to get the right tax policy, we want to make it convenient, but there's a lot of practical issues, not only for employees, but just dealing with tax incentives and other things. You want to talk a little bit about some of the practical sides of this?
Sure, exactly right, Brian. And I'm glad that Glenn covered what he did. And I understand the department's going to be coming out with some type of report or information letter in the future that'll be some good guidance as well. So we're looking forward to receiving that. Absolutely right on the incentives. We've always had in the incentive laws, going way back a few decades, this teleworker provision. And of course, now it takes on a whole new meaning and scope. And so what we are doing with a number of our clients that have incentive projects is definitely taking a look at that, because you do face the question, if my workforce, instead of being at the site, at the project, at the company, now they're working remotely. And generally speaking, the incentives tied to how many new employees do you have at the project, and then the compensation credit tied to the compensation that was earned by those employees with respect to the project. So definitely raises a new question. Now I've got so many people that are working remotely, perhaps even in Nebraska. So they're working at their home in Nebraska, or some might be working at their home across the river in Iowa or across one of the other border states. So does that work count in terms of an eligible employee and full or part-time for the project? So that's come up. Glenn and his team have been nice about helping us to address that question for a number of clients, so that we have some guidance as to what do we have to do for record keeping, and also what do we have to do so that they qualify under that teleworker provision. So definitely an issue there. And I might just kind of talk for a moment about another overall tax issue. We can go into some other impacts on kind of business and kind of legal things we're seeing with the remote worker for a few minutes if you like. But another thing is nexus. So when we think about any company, let's say that you're based in Nebraska and your business goes into other states, there can always be a question, how much presence, if I have in various states, at what level does that presence amount to a requirement now that I file an income tax return there, or that I collect sales tax there? So those rules take a little time to discuss that, but essentially, the more you have a presence there, then you may now have to file an income tax return there and apportion some of your overall income to that state, or you might have to collect sales tax there. And so with so many companies, if you take a Nebraska company that's now hiring remote workers in other states, those are now your employees. And the fact that they are your employees in another state may now mean you have enough presence, nexus, in that other state that's going to now trigger some additional income tax and sales tax reporting. So we do suggest that companies take a close look at that as well. It's something that we're constantly addressing with with our clients as well. When does it rise to that level that you may need to actually be reporting in more states than what you're accustomed to?
Yeah, so Nick, I hadn't even thought about that, but it's not even more than just hiring. Let's say you're an Omaha business and you're a service business that can be done anywhere. But historically, you've had everybody coming to the office, and now just as the economy is moving, you give total ability of your teams to work remotely, and some portion of them are going to live in Iowa generally. And does that create nexus with Iowa for your business? Which is a separate question. Glenn, let me go back to you. You guys are thinking this through. Obviously, the world's changing on us, and as we were talking right before the program, I'm seeing amongst the employers of chamber employers. I mean, some are fully back in the office, some are going to hybrid situations, some are going to totally outside the office employees at this point, total flexibility. And the hybrids are every shape and form you can imagine. Some are 3 days in the office and 2 days at home. Some are 2 days in the office and 3 days at home. You know, the article that's been circulating this week, I think, was Airbnb, which came up with a system says you can work anywhere you want, but 1 week a month you're in the office. But otherwise you can do whatever you want.
Right.
I mean, how are we going to create policy around this where every employee is essentially doing different things and not the same thing every week? I mean, it's going to be impossible for employers to track. I know you guys are working on guidance and you're just starting this process, but what kinds of things are you looking at right now as you come out with more guidance on this?
So it's interesting because it's the tracking part of it. And so we've experienced that a little bit already with the incentives. And so we had, like Nick was saying, is that we've had, you know, there's certain rules with regard to where the employee needs to be working, whether it's at the location or it's at the home. And of course, they have to be at their residence. And so in the incentives, Lisa, imagine, you know, there was an amendment last year to allow employees to work from their residence, but only in Nebraska. So you got to know, obviously, where they're residing at. So the employer needs to know, you know, first off, the employer needs to know whether their employee is a resident or a non-resident of Nebraska, or what state they're a resident of. And they've got to basically track where that employee is working, I think, in order to comply with some of these withholding rules, which I think is hard to do. And that's kind of what Nick was talking about, is that there's so much flexibility, you know, that employees can be at their, you know, I was at a meeting with somebody who was with a company. They're an executive with a company, and I know they work out of New Jersey, but the person kept showing up at our meetings at what appeared to be a cabin, and I think he said it was in Utah, because it had a big, you know, a big boar head or something on the wall. And so then it becomes, okay, so how does this employer deal with withholding with regard to that particular individual, you know, where they might be employed in New Jersey, they may live in New York, but they also work at their second home in Utah. And so, and then keeping track of that, you know, for Nebraska, when you're the state of residence, it doesn't matter, right? Because you're just going to, you know, it's just they're going to withhold on everything and give them credit for whatever they're taking in the other states. But for some of these states, like Utah, for example, you know, I assume they're going to want, because they're technically working in Utah, so they want some withholding on that income that they're making in Utah.
So one, Nick, we just learned a practice lesson, which is when you're talking to the state tax authority, don't have your background being mountains outside your window. Glenn's going to figure that out pretty quickly. But two, I'm wondering, Glenn, does it make, I mean, and I know you haven't issued the guidance yet, but does it make sense to have some sort of safe harbor generalities around some of this stuff? And I'm really particularly worried about small employers. And so even at the state chamber here, we have 10 employees. I just turned in payroll today, and it'll come out on the 15th. And you know, for a small employer, it would be really hard to track everybody and what they did every single week and create a new payroll every single pay period. You think we'll end up with something that is the sort of common sense safe harbors that we can use? It's practically correct, but not to the point that we're back of detailed records and having everybody keep timesheets.
Yeah, so, and we've looked at safe harbors before, and we might have done them before. I'm not sure in this context what we could do. We've done one. So we've done one where we've said basically, if you don't, even though you're working, let's say in Iowa for your convenience as an employee, if you never come into Nebraska, then we're not going to require the withholding. That's one, what I'd call safe harbor that we've done. Could we do more than that? We would have to obviously look at the department's authority to do stuff like that, because you know, at the end of the day, you have to follow the statutes, and certainly you might be able to do that via regulation. You know, that is a thorny issue with regard to, because you still have the tax statute, you know,
right,
and you still have the employee is technically liable for the tax liability, and so, you know, you create these safe harbors for the employers where they're not withholding, then you potentially have a situation where the department could be sending assessments to the taxpayer, because technically under the tax statute they're actually liable for a tax liability. So, you know, to the extent, we certainly do want to make the withholding easy for the employer, because, you know, at the end of the day, they're basically providing a service to the state, right, by prepaying the taxes. And so we can't forget that. So I don't know what, to the extent that we would be able to do any safe harbors, and certainly in a guidance document that we're planning in the near future, we wouldn't be able to do that. That I think would have to be more in a regulation, or potentially even in the statute.
Glenn, I'm going to ask you one more question, then I'm going to come back to Nick on this. But, you know, we have a couple areas in the state, and I need to be careful. So I'm from Gearing, so I better make sure that I don't always talk about Omaha. I mean, so in Gearing, Scottsbluff, it's Colorado and Wyoming. But let's just take Omaha as an example, because it tends to be one of the biggest areas for this is a lot of Iowa, Nebraska considerations. And Glenn, I know we talked about this during the pandemic. Possibility that Iowa and Nebraska would harmonize their rules on this so that employees in both states would operate under the same rules.
You know, I saw something in the statute. I thought that gave Iowa, at least Nebraska, the authority to enter into an agreement with another state with regard to withholding. And I think Iowa has an agreement with Illinois. And so, you know, that could be one of the, you know, one thing that could certainly be pursued would be something of that nature. And so, yes, and I think other states, like I said, I think Iowa and Illinois have done something like that.
Okay. Nick, I'm going to want to get to a couple questions here in the end, but in the meantime, you know, on the practitioner side, we've been here. The statute still says what the statute says, which is people should be taxed where they work, generally subject to the, you know, the de minimis exceptions and the business convenience exceptions. I'm assuming that generally we're always going to give advice that everybody should make a good faith attempt to comply. It's going to be really hard to be perfect, but it ought to be a good faith attempt to comply. What are you telling clients that ask about this stuff at this point?
Well, absolutely need to always make a good faith attempt to comply and have good records that relate to that. I think that as we look at this, we're honing in on these income tax issues. And if we take a little step back and we realize what's occurring in the marketplace. And so remote workers is a part of it. Shortage of workers is another part of it. Brian, I know you've been very active in looking at that from Nebraska's perspective. And then as we kind of focus back a little bit further, we do get to state tax policies. I know that you and I and Glenn, we've all had a lot of discussions about how should state tax policy change, how should state income incentive policies change to continue to drive growth in Nebraska. And even going back a little step further from that, from a company's perspective, these are all aspects of companies' business models that are really changing over time as companies look and say, given employment patterns and things like this that are happening, and other technology changes and other better ways to do business, all of that is coalescing here in kind of a perfect storm of change. And that I'm glad to see. I mean, Nebraska has been very proactive on now what do we do? And I think we'll continue to look at that. As you know, it's just as we've developed the incentives over time and tax policy, I think we'll continue to look beyond that to say, what else do we need to do in Nebraska to attract people to be here? So this is one piece of that, as you know, that we just need to stay focused on.
Yeah, and I would say, and I'm glad you raised that, Nick. So obviously from getting out of the tax code and the tax regs and thinking about Nebraska and our job at the chamber, focusing on economic growth, we need all the remote workers we can get in Nebraska. And actually every one of the 50 states right now is pursuing remote workers just as hard as they can. If I were to be parochial about it, I would write rules, and not tax oriented, but just parochial about it. I would write tax rules that made it very easy to be a remote worker in Nebraska. I would make compliance super, super, super easy. And I would make it very difficult to be a remote worker in Iowa. Now our employers would be grumpy with that, but I mean, if I was just to be diabolical about it, I do think that for the Midwest, we all have this workforce issue. I actually think Iowa and Nebraska working together around workforce ultimately has a bigger impact than each trying to steal from each other. And so that's why I asked Glenn the question, could we ever conform? But I actually think if the Midwestern states would all create some conforming rules around this with a broader goal of how do we put more remote workforce in the Midwest? We want to attract people from the coasts. And
I might suggest on that, Brian, that we do a lot of work with companies on their business models, and we look at their business model from the standpoint of every company has 9 building blocks to its business model. And once that's understood, it gives companies a chance to really innovate in very creative ways. And I've always looked at the state as well, even back when we did the incentives back in 87, and then when we revised them in 2005, and then the newest with Imagine Nebraska, we always looked at the state from the standpoint of you have a business model. And of course, it's a government, but also it's a state business. We have to attract people here. We have to be conducive to why do companies want to be here and why do people want to be here. And so if we can continue to look at our state from that business model perspective, I think that's going to help to really inform the policymakers as to what we ought to look like in the future, especially given these really massive disruptive changes that are for the good, as long as we respond in the right way.
Yeah. So, and I think, there's one of the questions we received is, for the employer trying to track this, we know when people are in the office or not, but we don't know, when they pop in for a meeting or they're here or they're there. I think it's gonna be really hard for employers to track employees, and I don't think we're gonna put sensors on employees or anything like that. And so then you end up with, it's ultimately gonna be the employees who are driving this compliance and reporting where they are. Nick, I'm gonna go selfishly to our tax policy issues. As long as Iowa had an income tax rate that was higher than ours, I like that system because employees would want to be taxed in Nebraska. They just had a big tax bill. We just had a tax bill. I think it's going to be really important that we stay competitive on tax rates on this issue once we get to remote workers who can live anywhere and now presumably be taxed anywhere depending on where they live and work, subject to a few rules. We're going to have to stay competitive on tax rates to really attract this group.
Yeah, we are, as you know, from the work that we've done together in the site selection work that we do with clients. That's always it's a big issue, multiple issues, but taxation state to state, always a big issue. And keep the focus on it, because we have to stay competitive. And again, that comes back to how does the state view its business model in terms of its customers? We mentioned the IRS commissioner looked at the taxpayers as customers, and that we need to do that. And our customers are companies, and our customers are individuals. And if we can stay focused on that, tax rates, that's really what's the price the state's going to charge for its customers to be here. And as long as we keep that perspective, that requires us to keep looking at how other states are doing it in terms of rates and in terms of convenience.
I'm quite sure the legislature will take up tax issues again next year. My suspicion is this issue of remote workers becomes a big part of that discussion. I don't know how it doesn't. And both from a tax administration standpoint, Glenn, but also from Nick and my sort of how do we continue to attract jobs and companies to the state. I think this continues to be important. So I think this discussion is helpful today. I told you guys the 30 minutes goes really quickly, but I don't want to end quite yet. One, I want to thank you guys for this discussion, and you two are my go-to people on stuff like this. So thanks for being willing to do this. But Glenn, there was an important piece of legislation that passed in the prior legislature around property tax credits that are really, really important and have provided a substantial amount of property tax relief in the state. And I know that you probably want to get a little bit of a word out on that. So let me finish with you and anything you want to say about that subject.
Yeah, so it's a property tax credit that you can claim for, and it was for 2020, 2021. So for 2020, you could get a 6% credit on the school taxes that you paid on your property, farm property, agricultural, business, commercial, residential, all property. And so I'm just encouraging folks, because for this year, it was 26% of the school property taxes that you pay. And on my house, it was half of my tax bill was for those school property taxes. So it ended up being, $600-700. So I would encourage you to claim that. Right now, we do not have 100% of that being claimed on returns that are being filed. And so we want to encourage folks to, especially tax professionals, preparers, to make sure you claim those on behalf of your clients and get the word out that it exists.
Well, that's super. And Glenn and Nick, much appreciation. I'm not sure Glenn always appreciates Nick, you and I, when we're in our full lawyer mode, but we really appreciate the friendship of the three of us. And like I say, I appreciate it, all the balls being counted as balls and the strikes being counted as strikes. And we're a lucky state. We've got great government and great government efficiency here. And so thank you both for being here. And I'm sure we'll talk some more tax at some point in the future.
All right. Well,
Sounds good. Thanks for having us on.
Thanks.